Good afternoon, everybody. This is Hunter Mozingo, Associate Portfolio Manager and Research Analyst for Revere, bringing you your daily market insight video here on Monday, July 11th. And today was not a pretty day. We saw the major indices lose a key moving average. We're going to talk about that. We're also going to talk about why today's lows on the indices is very important as well. So we'll get right into what just happened. Gap down, major indices back below the 21E. That's that key moving average. We're going to take a look at that across the big 5 large cap indices here in just a moment when we get to the charts. But first, performance wise, the risk on area was what was doing the worst today. So G6 down 2.5, QQQ down a little over 2, Russell 2000 also down a little over 2. If you've listened to my videos over the course of the last few weeks, you know those 3 are kind of indicative of more of the risk on area. So S&P down a little bit more than 1, as you can see, down 1.15. Dow, the most defensive of the major indices, down 0.52. Mid caps also down 1.15. And you got 60/40 down 0.72 today. Grotection down a little over 0.5%, 0.52 there. You'll also notice that we have a question mark here after the short-term uptrend. So we added this in last week, correction, but still with this short-term uptrend today. The short-term uptrend comes a little bit under pressure, and that's the reason for that question mark. Back below the 21, a lot of the major indices also back below the ADMA, which is another short-term moving average that we pay attention to. So short-term uptrend now kind of in an under pressure mode. We'll see how this plays out tomorrow, but again, we're going to look at the charts. We're going to talk about why today's lows are so important, and we're going to keep moving through this quickly here. So market leaders, this had a sub arrow pointing bullish. We moved this back to the black neutral arrow here after some of the price action today was not very pretty in a lot of names. Short term, we have this small red arrow here pointing back towards neutral, again, for the same reason that we talked about in the very beginning, the major indices back below their 21 EMA. And then medium term, this was once pointing towards bullish as the Qs were challenging the 50-day. For the time being, they have gotten shut down. So back to the black arrow on the sub arrow here as well. So again, market leaders, sub arrow green to neutral here on the black. On short term here, got this red arrow pointing back towards neutral with the close back below the 21E. And then medium term, we backed off that 50-day on the Q. This is back to a black sub arrow as well. So let's go ahead and get to the tail of the tape and look at some of these charts. But first, as I do in every video, please just take a quick moment here just to look at our emails as well as the phone number, just in the event that if you have any questions, you can easily reach out to us again. And if it's anything about this video, so a certain stock, a certain level, whatever it is, don't hesitate to reach out. My email is hunter@revereasset.com. Our phone number, 855-732-5932. Or you can reach out to anybody here, Merrill, Dan, Don, or Tim at revereasset.com as well. So let's get to the tail of the tape, and I'm going to pull this up here. All righty, so Monday 7/11, we went through all this short-term uptrend. Now with the question mark, we actually saw the CPC spike up to around 1.2 today after settling back in its normal range of kind of around the 0.9 to 1 area, like I've been saying for the last couple of weeks or months. VIX up about 6% today over 26. Fear greed pulls back a little bit to a 27. Bear case, rally failure and break of the 21 EMA. You can see we are possibly on the first part of that, looking for either continuation to the downside or a reclaim of the 21 EMA. But right now we're still kind of in the middle of the bear case and bull case here. You want to see this reclaim of that 21 EMA. News-wise, Musk backs out on the Twitter deal. China's gambling hub has a COVID shutdown for a week. And also China fines multiple tech companies for anti-monopoly failures. So a lot of news kind of swirling around, mainly Tesla, the big focus and as far as the American market goes. And we'll talk about Tesla's pretty abysmal day here in just a moment. On watch today, S&P versus the S&P and QQQ versus the 21. And you can see here as far as support goes, initially we had an undercut and reclaim. Ultimately that failed with the poor close today. Resistance, the 50-day, we didn't get there today on either one of those, but we had a undercut and reclaim of that support level we were watching. Ultimately that failed. Action wise, we were open down about 0.7 here, as you can see, down to just under 38.50, 38.49. tight basing action, and then around 1 o'clock we have a breakout over 38.65. We ultimately pause at 38.80, and then we trend lower into the close, pull back about 1% off the highs on the S&P to finish relatively close to the lows of the day. So not the most beautiful close there for the indices. 38.50, we're going to look at that in just a moment. That's a big level on the S&P as well. So low to high, 38.47 to 38.81. So an actually relatively tight day, considering the S&P has become accustomed to moving about 2.5% on a given day at this point. Notes wise, we have some huge CPI and PPI, huge inflation reports coming out this week. CPI on Wednesday, Thursday, the PPI. Keep a close eye on those because the market will certainly react to them. Performance wise, again, S&P open down 0.7, closed down 1.15. G6 leading the way down today, down 2.54. 60/40 down 0.72, grow down 0.52. Sectors, dollar up pretty nicely today. That is one of the main takeaways from today, and one of the main reasons that the market was having a tough go is this dollar has broken out and continues to move higher. High yield bonds also up, natural gas, ITB finished just a teeny little bit red, but it was green on a day where the markets were not. Bonds, you also have utilities and real estate also closing just real estate actually closed exactly flat. Utilities up, XLP&B just down a teeny little bit, but big time relative strength versus the indices. China, biotechs, communications, discretionary, cloud stocks also having a tough day. So portfolio wise, we went down on the beta today. We bought a hedge here. We also bought some QLD. We sold our SPLG position and sold our IWO, which is a small cap growth. A lot of choppy action today, but ultimately we reduced our exposure via our trades today. Bottom line, large cap indices break back below the 21E. As you can see here, today's close 38.54, back below the 21E, which is right around 38.70 on SPX. So let's get into the charts here, and we're going to look at the S&P first. But before we get into the indices, I actually want to look at UUP, which is the US dollar, before we get into any of this. And I want to show you what I mean. This has ran off and gotten extended here. A 1% move on the dollar is a big move. You don't see big moves out of UUP like you do a stock. So at 1% or more on UUP is a pretty substantial move higher, evidenced by the nature of the gap today. But you can see this is a big move above this 28 level. This is a big breakout level, and I've talked about this prior. Getting above this 28 level is a big area to clear, and you can see that that is happening today. So the dollar, strong dollar is a short-term headwind for U.S. stocks, no doubt about it, and it certainly felt that way today. Also TNX, I talked about this 3% level being a big spot to watch. You can see this strong rally back up here, but kind of pausing a little bit around this 3% area. This is the 10-year note. Keep an eye on how this acts. If this ultimately continues higher, that could present some more trouble, specifically for growth-related stocks or technology / the more high PE type of names. So, but nonetheless, important to watch what happens here at 3%. This is a very pivotal area, not just for the 10-year note, but for the whole market. So back to the indices here. I'm going to pull up the S&P 500. Like I said, back below the 21E and back below the 8 EMA just ever so slightly as well. And I mentioned in the very beginning, why is today's low so important? So obviously we're back below the 21, back below the 8. The reason today's low is important is if you see this low broken and ultimately you don't see a quick reclaim or a quick bounce after that, it's highly likely that you're going to see this 21-day exponential moving average start to roll back over. And it's also likely that the 8 EMA is going to roll back over, and those just present harder paths to continuing higher for the major indices. So you don't want to see today's low broken. If you're a bull, what you're looking for over the course of the rest of this week, over the course of tomorrow, is you want to see the indices either at least go sideways or get back above some of these key moving averages, back above today's high. You do not want to see today's low broken and more downside afterwards, because like I said, that leads to a likely scenario that the 21 rolls over along with the 8 EMA. That is not what you want from a bull perspective here. Same case for the Qs. Just closed ever so slightly below those moving averages, just a couple of pennies below, honestly. Ran up into the 50-day pretty much on Friday, and today you can see coming back down. Moral of the story is you don't want to give back too much of this move here, right? So you had this move starting with on 7.5 where we go up about 2% and we proceed to run up into the 50. You don't want to give back too much of this move. And again, you don't want today's lows to be broken and close below the lows. You don't want to see that 21E and that ADMA roll over and possibly start to angle down again like they did here, like they did here, like they did here. So that's what you don't want to see. You don't want to see the lows broken, and you don't want to see it stay below today's lows on the indices. Very important thing to watch for the remainder of this week. DIA, similar setup here, closed right on the ADMA, below the 21 EMA after a couple closes above. You want to see the same thing. You don't want to see today's low broken and stay in below it. If anything, you want to see a quick undercut and reclaim here from a bull perspective. Again, the Dow, the most defensive. On a day like today, you can see the RS line hooking up. When the risk on stuff was performing, the RS line angling down. Moving along here, mid caps, MDY, another area of the market that's been weak, as you can see by the RS line here, since the lows made a couple of weeks back here. And this one actually never had a really solid close above the 21 EMA. It closed basically right on it to slightly above it here on last Thursday, but back below it on Friday and then back below the ADMA today on MDY, continuing to show some weakness relative to other areas of the market. And then IWM, also a pretty poor day here, back below the 21, back below the ADMA. Same situation. Keep an eye on today's lows. You don't want to see us start to live below it so that you see these moving averages roll over and continue to the downside. So now we're going to get into some stocks. We talked about why today's lows were important. We talked about the key moving average that was broken in the 21 EMA along with the ADMA on a lot of the indices here. But we're going to look at some of the names that were acting okay today. So Cigna, CI, this medical managed care, you can see number 10 out of the 197 industry groups acting very well since this shakeout here. CI actually putting in a new high right here. Another name in the space that wasn't green today, but it's acted pretty well recently. Excuse me, UNH, as you can see, back above its key moving averages, staying above the 8 today. Not necessarily anything wrong with UNH right now, but these are more defensive areas in the market. Moving right along, some more healthcare names that actually had a decent day today. Excuse me. Humana, another name, very sharp rally after the shakeout here. VRTX, another part of the market, or another name in the healthcare space, continuing its move higher. You can see the way it bounced pretty much off the ADMA or around the 10-day simple moving average today. VRTX, one of the top names in the market, along with two other names here. LLY, which was able to have a green close today on a poor day in the markets, and then BMY, Bristol Myers Squibb, also had a green day today, but not as strong looking as you can see by some of the selling over the course of the last week or two. But these defensive kind of healthcare names are where we've seen some strength recently, and certainly saw that today. In another more kind of defensive area in the retail space, Dollar General and BJ's up nicely today. BJ's is up relatively comparable to Costco. You can see this has had a really nice move over the last 5 or 6 days. Excuse me, RS line blue dot here on BJ's as well. AMT, a name we've been talking about a little bit over the last few weeks, trying to get back above the key moving averages here. And you can see we undercut the 21, but we ended up getting back above that, back above the 8, back above the 200 day. This thing really needs to clear this high to really get going, in my opinion, but there's some pretty serious volume here on AMT over the last 2 or 3 months, as you can see. I guess really that's going just back to the beginning of June. But AMT also a more defensive area of the market. And as far as sectors go, XLU, the lone significantly green sector of the day, up 0.63%. As far as bad goes, I mentioned Tesla. You would think the market might like that he was backing out of the Twitter deal, but nonetheless, the price action was not good. You can see here, poked its head above the 50-day, but now we're back below the 50, the 21, and the 8 with the close today. Not really the action you want to see at all from one of the more important stocks in the market. So Tesla having a nasty close back to the 700 level. Nvidia, another market or a name that's really important to the market. You can see this one had its 2 closes back above the ADMA, ultimately just to get shut down again today, down over 4%, back to this 150 level. And as far as big caps go, Meta, which is the old Facebook, down about 5% today. This is still a relatively big component of the Qs and of the indices. Even though it's had this big drawdown, it still impacts the indices, along with Amazon, who is down about 4% today, 3.5% or so. As you can see, again, same kind of thing we saw with Tesla. Poked its head above the 50, but now back down below the 21, the 8 as well. And then Google, who had shown some relative strength recently, not having a great day today, but looks better than a lot of these other names. As you can see, down a little over 3%, but still above its key moving averages, still above the 8, the 21, and the 50, but nonetheless a drag on the indices today. Moving along here, just a couple of names to highlight. DigitalOcean, DOCN, this was one of the better looking names for a little while, but today they got a downgrade and just absolutely got wrecked, down 17%. Roblox was a name that had gotten some traction recently, down about 7% today. Doesn't mean that this little uptrend right here is broken, but not necessarily the action you want to see, but certainly important to pay attention to Roblox. It appears there might be some accumulation going on with these major volume bars on the up days there. And then we also saw solar have a tough day today. Sedge down about 5%, ENPH down about 5 or 6% as well. And then TAN, the ETF, also down close to 5%. And these all had really nice days with really nice volume on Friday, just to be followed up with a really poor day today. So not a ton of positives out there in the market, aside from a few healthcare related names and more defensive names. A pretty good bit of red out there today in the markets, a lot of it actually. So keep a close eye on today's lows on the indices and on individual stocks. And we'll see where we go from there. We want to see that 21E reclaim from a bull perspective. Today, you've got that first close back below it. So not necessarily the best action on this Monday, but there's still a whole week ahead. So we'll see how it plays out. So that's going to wrap up today's video, everybody. Thank you for listening. I will see you guys on Thursday's video as well as the podcast. So have a great week, everyone.